Your backtest says it's a winning strategy, but when you go live, it crashes. What if the problem isn't your strategy, but the candles themselves? Most traders don't realize TradingView makes hidden assumptions about price movement. In this video, I'll show you the tool that reveals what really happens inside each candle and why it could completely change the way you backtest. What is Bar Magnifier? Bar Magnifier is a powerful feature in TradingView's Pine script that lets your strategy peek inside each candle using lower time frame data. Instead of guessing how price moved from open to close, it reconstructs the actual price path, capturing every dip, spike, and tiny fluctuation within the candle. It replaces assumptions with real intrabar behavior, giving your backtest a level of accuracy that closely mirrors real market conditions. The result? Fewer surprises when you go live, and a backtest you can actually trust. How TradingView reads historical candles assumption only. When TradingView reads historical candles, it only sees the open, high, low, and close. That's it. It doesn't know how price actually moved inside the candle. So by default, it assumes a fixed path based on candle color. For green or bullish candles, open to low, then high, then close. For red or bearish candles, open to high, then low, then close. These assumptions may seem small, but they can create big problems in your backtest, like missed limit orders or stop losses that would never happen in real trading. Bar Magnifier transforms how your strategy reads each candle, replacing TradingView's assumptions with real lower time frame data. If you're on a 15-minute chart, it might use 2-minute candles to reconstruct the actual price movement inside. This means your script can catch every spike, reversal, or fake out that a normal candle would hide. Here's the mapping TradingView uses. On a 1-hour chart, it uses 10-minute data. On a daily chart, it switches to 1-hour candles. Everything adjusts dynamically, giving your strategy a more accurate view of real market action. This directly affects your strategy, limit fills, stop losses, even fake entries. Here's how to turn it on. Open your strategy, go to Settings, then the Properties tab. At the bottom, you'll find Use Bar Magnifier. Switch it on or off anytime and instantly see how it affects the results. You can also go to the Strategy Tester, click the arrow, and toggle Bar Magnifier from there too. It's quick, it's powerful, and it gives your backtest the edge it needs. Take a look at this example. On the 15-minute chart, it looks like price hit the target cleanly. But with 2-minute data, you see the truth. Price actually hit the stop loss first before it ever reached the target. Without Bar Magnifier, this trade would have shown up as a win in your backtest. But in reality, it was a loss, and that one detail can completely shift your strategy's performance metrics. Now you know, candles don't always tell the full story. If you're serious about strategy development, Bar Magnifier isn't optional, it's essential. Hit like if this helped, subscribe for more insights like this, and drop a comment if you want a full strategy demo using Bar Magnifier. Thanks for watching.